Conversations around, of course, the perhaps unraveling of the stock market. What do you make of, the sell-off we've seen in recent days?
I think we're seeing some volatility. We're seeing some uncertainty. Uncertainty is probably the big theme. And if you look across markets around the world, there are questions about the levels of debt. There are questions about inflation. There are questions about AI. Is it a bubble? Is it not a bubble? I think that this kind of environment where there are that level of uncertainty, we see a lot of activity in the markets.
You welcome the correction?
Well, I'm not sure we're in a correction yet. I think there's always a healthy dynamic in the markets when investors take a step back and they look at what they're doing. I think there's been a lot of discussion on valuations getting stretched, a lot of discussion on whether some of the different sectors in the market, AI or others, will generate value or create some value destruction. I think it's healthy for people to be thinking about that and helpful. That's what makes a market.
Is there froth? What are you thinking about those stretch valuations? Are they justified?
I think what we'll see is that you're going to have some companies that will end up doing well, and you'll have some companies that will not. I mean, and when we see these kinds of frothy valuations going into new sectors or new innovation, sometimes it ends up well, sometimes there's real value destruction. I think it'll be a mixed bag.
But there's a lot of talk about how there's too much risk, too much leverage, and perhaps it is time to reassess how money is deployed, especially with retail investors pumping in the money right there. Is there a sense that perhaps investors are underpricing the risk right now?
I think there is a case to be made that markets are underpricing a lot of the risks that are going on right now. And then that kind of underpricing, if you will, is supported by plentiful liquidity in the markets that we have seen really over the last 5-10 years. A lot of that pumped into the markets with government action. So it's hard to know. There's also a positive case to be made in a number of areas. Are valuations stretched, or are we on the cusp of a massive new productivity boom? I think it's going to end up being a little bit of each, but it's hard to know.
We know that that's not the only concern. The other concern is also to do with the private credit space in particular. The likes of Jamie Dimon have called out how cockroaches have appeared, and they have. Is that an area to be concerned about, or is there an overblown kind of fear that we're seeing at this time?
I think it is just another dynamic in the market. And when you have, whether it's private credit or private equity, I think the fundamental issue or the fundamental driver of uncertainty is that by definition there's a lack of transparency. And transparency is helpful in terms of having sort of a public markets. You can have a daily mark to market. Sometimes those valuations in the public markets can get a little bit out of whack as well. So that's not a cure-all. But that kind of daily transparency is helpful in terms of reducing some of the uncertainty. When you have this significant expansion in private credit, a little bit of the blockage in the private equity markets, that adds to, it's another risk in the market. It's another risk in the system.
We talk about liquidity, a lot of money sloshing around, and that's supporting the valuations that we're seeing right now. But we're not really seeing that flowing to you, to the UK, the like of IPOs. How do you explain that?
Well, I wouldn't say it's specifically a UK thing. In other words, if you look on a global basis, we have had a slower period with respect to IPOs over the last few years. IPO market windows open and close. It was a pretty tightly closed window in a lot of markets for a couple of years. The US saw its market opening earlier this year. The UK has seen its IPO market open really since the beginning of October. We've had 7 IPOs in the last 7 weeks. And the pipeline's looking good. So I think that market, the IPO window will continue to open and shut depending on what's going on.
So do you expect the pace to accelerate? Because, I mean, you said that it is a global trend. It's not really. If you take a look at the IPO market in India, it's thriving. The IPO market in Hong Kong is thriving. But it's not where you are.
It's thriving now. But a few months ago, or last year, China was seen as uninvestable. And so these are cyclical dynamics. I think in the UK you have seen the IPO market pick up really in the last couple months, and the pipeline's looking very healthy.
What might pull back, the interest from companies wanting to IPO from Asia, from the US?
Specifically into the UK?
Yes.
I think that the UK, one of the great strengths of the London Stock Exchange and the UK market is it's the most international financial center and the most international capital market in the world. Significantly more so than the US, which frankly is more focused on US stories. Hong Kong tends to be more of a gateway for China and have companies having a China nexus. But the UK...
But it's global competition, David. I mean, like every single market, no matter what region, is trying to draw the IPOs to their market.
Sure, but the different markets have different strengths, and one of the great strengths of the UK is that international positioning, and that we have investors and companies in London from all over the world. Something like 40% of capital invested in London-listed companies comes from the US. We have capital coming from Europe. We have capital coming from the Middle East and Asia. Whereas in other markets around the world, it tends to be much more regionally concentrated capital.
Is the weakness in the UK economy a consideration for companies wanting to IPO?
I think whenever companies are thinking about IPOing, they're looking at the macroeconomic factors. If they have exposure to a particular country or to a particular region, of course they prefer to IPO in an environment that is looking like it has a strong growth trajectory ahead. And equities, by definition, are forward-looking. So I think a strong, healthy economy is helpful for companies that are looking to list.
Could the budget that's coming be a game changer in terms of sentiment towards IPOing in the UK?
I think there's obviously been a lot of focus and anticipation around what the budget will hold for the UK. I think the important thing for the UK from an economic perspective is to make sure that its fiscal house is in order, to have the breathing room for investment, both public sector and private sector investment. I think there are clearly some fiscal challenges. There's some political challenges. And I hope that the government can put a budget in place that addresses those kinds of needs.
AI, of course, is a big theme for exchanges. AI, data. How do you see that contributing to the business?
So for our business, AI is a big opportunity for us. So roughly 50% of our business comes from our data and analytics. And we are seeing significant opportunities in terms of both embedding AI in our workflow, but also in providing our data into a lot of these large language models and cloud providers that are enabling more and more of this AI functionality. So that's a very significant opportunity for us. We're also using it in our internal operations, whether that's customer service, whether it's how we ingest data and use more AI and automation to do that. So big opportunity for us that we're seeing really across the business.
So how are you invested, and what's your AI strategy basically to benefit more from the technology?
So it's really those three areas. It's embedding AI in our product and what we refer to as transformational product. It's our trusted data, where we're providing our data. We have partnerships with Microsoft, with Databricks, with Anthropic, and a number of others in terms of embedding our data, which is trusted and in many ways industry standard on a global basis, embedding that data into these models. And then the third leg of our strategy is what we refer to as intelligent enterprise, making AI functionality a core embedded part of how we serve our customers, how we drive our operations, how we run our analytics, and it's having a significant impact in terms of improving our efficiency.
Why do you think your strategy is not sitting well with your investors? When you take a look at your stock price, it's not doing as well as your competitors, for instance. It did get a lift from your earnings, but it's back to where it was before.
I think there has been a significant question or a narrative ongoing in the markets as to whether AI is going to be a benefit or a challenge to a number of companies in the information services space. When I look at the opportunity that we have and the opportunity that we see going forward, and a number of our investors really understand this opportunity, I think it's going to be a great trajectory for us going forward. the market will do what it will do, and market goes up and down. I think there's a lot of misunderstanding and uncertainty associated with the, I'll say, disruption potential that AI has. But in terms of LSEG's positioning, I think we're in a
But
great
it's about
position.
building investor value. How are you doing that?
In terms of providing our data into all of the AI driven models, if you look at the consumption of data that we're seeing now, in part driven by the continued or the growing use of AI, that plays right into our strengths because we have the best data in the world for the financial sector. We have a huge amount of it. Just to put that in context, the common crawler metric of what the size of the internet is, which most of the public LLM models have been trained on, it's about 10 petabytes. We at LSEG have 33 petabytes. I mean, it's an enormous amount. Humans can't consume that data. Models can. The key point is for the models to consume that data in a way where the data is structured so that it is accurate in the models. And that's what we provide in this environment with all of our partners who are using our data for AI. So that's a huge opportunity that's just getting started now. We also have, in terms of our workflow, in terms of our analytics, embedded AI into that functionality. So that in the same way that Microsoft talks about getting 40% greater efficiency with GitHub Copilot, we have greater efficiency with our financial analytics because we've embedded AI in that. So lots of opportunity there as well.
David, you recently addressed leadership changes. I'm wondering whether you did that on the back of pressure from investors or analysts. I mean, what's the thinking behind that?
So LSEG's been going through a significant transformation over the last few years. And we are now one of the world's leading financial information providers as well as market infrastructure providers. The transformation that we have gone through doesn't just happen. In other words, we have, in a number of areas, brought in great new leadership to drive that transformation. We're a very different company from what we were certainly 5 years ago, but let alone even 2-3 years ago. So part of that has been bringing in great new leadership.